Hello, everyone. Welcome to our weekly Fast Track Money session. And today is a special session because we have a special guest. But if this is your first time coming here, I'm Yasi, the founder and creator behind Fast Track. So we have a podcast and then we have a content platform where you can learn all the best practices from people who have made it and done it in area of entrepreneurship, money, and career. And in this area of money, we created this collaboration with Financial Imagineer. So Matthias Richter, he's the co-host of this YouTube live session, but today he's going to be a guest together with Peter Saddington. So Peter Saddington is the four-time founder of startups, and now the founder of Emirates, the global hardware job, like a hotspot hardware job for people to mine Helium tokens. And besides that, he's also an agile coach. And Matthias Richter, as you all know, behind Financial Imagineer, he's about to helping you Imagineer your life financially with his content and insights about investing, personal finance. And today, our topic is about millionaire advisor, Matthias Richter, who used to be advisor, or right now he still is a millionaire advisor for more than 100 clients in wealth management. And on the other hand, we have Peter, who is a crypto investor, who is a crypto tech startup, and we will see how the conversation goes today. So you guys want to greet the audience today right now?
Okay, thank you, Yasi, for having us, and thank you, Peter, for being here. I'm looking really forward to that session. Crypto has been something always interesting me, but so far I have stick to the rule that if I don't fully understand it, I stay out. So I'm still out. And today I'm going to ask some questions to you and see if you can maybe convince me to do otherwise. And on the other side, please, I'm so looking forward to this kind of exchange of ideas. And yeah, up to you, Peter.
Thanks so much, Matt. Thanks so much, Yasi, for hosting this. I look forward to this conversation as well. I've had many conversations with individuals, and the goal is never to convince, but merely state the facts and the opportunities that exist. So if I can do that well, Matt, maybe we'll have a new cryptocurrency investor in the future in you. I know that Yasi's into it, so we'll see if you can be convinced today. So thanks again for letting me be here.
Yeah, I know for the audience here, please be aware that our conversation today is not a financial advice. It's purely our personal opinion and advice. If you want to invest, understand yourself, do your own research. So how we will do this is that I will ask you guys some questions, and audience, you can also ask your questions in the comment section as well. And at the end of the question section, and then they have the chance to ask each other the questions that they have. I have said so many questions in my few sentences. Okay, question number one. Do you guys own stocks?
Yes.
No.
Interesting.
I can tell you why. So I'll give you a quick story, Yasi and Matt here. So I used to invest in stocks. I used to. However, being the cryptocurrency, I would say maybe enthusiast that I am, I got to a point finally in 2016 where I was just frankly making way more in terms of interest, in terms of gains, in terms of all of that in crypto. And it just made sense. Now, at the time, a little bit of context, I was also an operator and a startup entrepreneur in the cryptocurrency space. And I was building cryptocurrency applications that were venture funded. So my job, my passion, my hobby was all moving into cryptocurrency in 2016 anyway. And so it made a lot of sense. But long story short, I called my financial advisor in 2016 and I said, bro, I need to pull everything out. And he's been with me for almost 15, 16 years at this time. And so he was like, oh my gosh, is there a financial issue? Are you having a new baby? Like, are you trying to move? Like, why do you need to pull out, from the stocks, bonds, 401ks, Roth, traditional, money market? I told him I want to liquidate all of it. And he said, why? And I said, well, I want to move it into cryptocurrency. And his response was, what is that? And so that turned into a very interesting conversation with my financial advisor around that. But right now, I am 0 stocks, 100% cryptocurrency in my portfolio.
So we have another side is 0 cryptocurrency, 100% traditional asset. Okay, let me move on to the third question. Or the second question is, do you own real estate?
Yes.
Yes,
Okay.
I do.
And the third question is, own Bitcoin?
No.
Yes.
Yeah, okay. Now I want to ask you about your investments, and since when did you start investing? At what age?
Matt, I'll let you take that first.
Okay, I started rather early. My first stocks, I actually started to have a trading account at age 16. My first investment was a stock in Roche, which is a pharmaceutical company from Switzerland. And soon after that, I sold Roche and thought, okay, here's the brave new world. It was back in 1998, 99, and everyone was very hot on new economy stocks, right? So I went all in and bought things back then, such as Microvision, who had some kind of fancy retina device that projects the picture directly on your retina. You don't need a screen anymore. I bought things like Cree, which had a blue laser that can incredibly improve your storage capacity on DVDs and things. It was the golden age of the new economy, and I put all in there, and I saw my wealth go up like this. It was tremendous. And then like 2 years later, the party was over and I was still having a party. And then I think that was my first lesson learned is like, you know, if something is too good to be true, I get more cautious. And that was my first investment.
Awesome. I started relatively young as well. I was really fortunate that my father was deeply invested in the traditional world of investments. And at 12 years old, my dad came to me and said, hey, let's make a deal. Anything that you invest, I will match it. And so at 12 years old, this was a big deal. So I only started off with $1,500 and my father matched it. So I had a total of about $3,000 to invest. And I invested in essentially at the time, this was the mid 90s, right? Your blue chip stocks. So your Pepsi, your Coke, your Sun Microsystems, your Microsoft, and Kellogg's. So Kellogg's was the cereal brand, right? And so I invested in these stocks. And if you remember, maybe we're dating ourselves here, but in the mid to late 90s, those were the best times for Microsoft, Sun Microsystems, Kellogg's. And so I saw Microsoft go up to like 120, split down to 60, go back up to like $1.30, split down to 70. It was just awesome. And so from all of the returns that I had on my first initial investment of $3,000, I ended up with a total of about 20, in which by that time, when I wanted to buy a brand new computer, I bought a Pentium 2 233 megahertz with MMX technology. It was a gateway computer, and it cost me $6,700, almost $7,000 for that. But it was one of the greatest things I could have done at the time in high school, is buy this awesome beast of a computer that I could play Warcraft and Diablo on. But it was all through my games in the traditional stock world. And so that really gave me a great taste for the world of stocks and the financial investment part of it as well.
Wow, you two started really young, and nowadays we are still trying to help people understand money and help people understand investing is not that scary, but great story. And my next question is, what is your favorite investment type, your personal favorite?
Okay, maybe for me, I like things that kind of, number one, help you protect your purchasing power. Number two, have some decent upside, you know, like not just stay there like a bond or something. Number three, if it's even giving you like dividends or something else, it's not a must-have, because some companies like Berkshire, eventually they reinvest it, right? Then it's a plus. And the less volatile it is, the better. That's for me, like, and even like number 5 would be real estate, for instance. If you can get leverage on it and you understand it and you can actually price it and get a feeling that's the big question then later, right? About what is the actual or the fair value of something. And there, I think the opinions can go like this. That's why markets always go like this. But this is the interesting field. If I feel, okay, my money is parked somewhere, it's working for me, I know what it's doing for me, and I know where it should go, right, over time, then for me, that's the perfect investment.
And sometimes you mention about, how do you say, derivatives, like those sophisticated investment types. Do you also like those types?
Yes, sometimes they allow to kind of express different market views. Like if certain things are high, volatility shoots up, you can sell call options on your positions. I also hold some funds. They have that implemented inside so that you get paid out for higher volatility. And on the other side, if you kind of would be eager to deploy money back into certain things, but you think the price is too high, you can do it the other way around by selling put options. You actually sell fear. If there's fear in the market, you monetize it in a way. And that's something I like a lot. Yeah, you sell fear.
Fear and greed. Okay, next question to Peter is, what is your personal favorite investment type?
Well, when you say, are you talking about investment type in terms of asset class, or are you talking about investment strategy?
Asset class.
Well, it's pretty clear to me, and I think it's pretty clear to everyone on this call, as well as our audience, that my favorite asset class is cryptocurrency. Not only obviously with the heavy bias of being a startup entrepreneur and operator and investor in this space, a venture capital investor, but for me, it allows me to stay in the bleeding edge of technology. The coolest stuff is coming out in the cryptocurrency world. The coolest stuff is coming out in this bleeding edge tech when it comes to the convergence of IoT and blockchain, and as well as you guys know, the rise and growth right now of DeFi. And so absolutely, my favorite asset class has to be cryptocurrency. There's so many ways to make money on money in this digital currency world that I just feel like, well, you're not missing out. If you want to get in the game, here's my plug, right? If you want to get in the game, you're still early. We're still waiting for mass adoption. There's lots of opportunities to learn so much about the cryptocurrency game and be safe investing while doing it. You don't have to throw in a lot. You don't have to risk a lot. Cryptocurrency is great because for some of you guys who might be from the traditional world, you've heard of penny stocks, right? Small cap stocks. And so cryptocurrency has opportunities to learn very similarly to of the investment world by getting into small, low valuation tokens and coins and not risking a whole lot. So obviously, Bitcoin and cryptocurrency is where I like to play.
Yeah. When you mentioned penny stocks, it reminds me of like a IOTA and the Cardano and the early days, even Helium, they're all in pennies. And yeah.
Or fractions of pennies. And so you don't have to have too much to really begin learning. You only have to have about 50 or $100 to be able to diversify amongst a multiplicity of tokens and coins. And the more that you learn, the more that you spend time in the seat, kind of a racing terminology, right? The more that you spend time in the seat learning with low risk, a total amount of financial risk, it's a great way to get your feet wet and get interested and more intrigued about the world of cryptocurrency investing.
And my next question would be then touching on to what you asked me earlier, that is about portfolio strategy. Maybe Peter, you can continue. What is your investment portfolio strategy?
So I have a very simple 1, 2, 3 portfolio investment strategy. Number one is what I call principal or value-based investing. Now, I don't want to spend too much time here, but essentially what value-based investing is, what are your actual values? What do you care about? What do you care about as a human? What do you care about as a career? What do you care about in terms of your relationships? You might say, well, Peter, why does that have to do with investing? It has a lot to do with investing because your values determine how you'll behave. Are you looking to just make a quick buck? If so, there's certain options for you. If you're looking for long-term returns, there's different strategies for you. And so one of the first things you really need to understand from yourself is, what are the values that you care about? Are you care about working with saving the environment and global warming? Well, there's lots of cryptocurrencies, for example, that support that. And so you want to base your investments on what you value, right? Because I think it's easy, especially in cryptocurrency world, to start investing in things that you actually don't care about, but you heard about and you think you can make a quick buck. For example, Dogecoin. Let's be honest, ain't nobody really care about Dogecoin, but a lot of people think they can make a lot of money. I would not invest in Dogecoin if that's not something within my values, right? Number two, very important, never play with bread money. Very simple, you gotta eat, right? And so never play with more than you're willing to lose. Never play with money that you actually need to have to survive. Whenever I tell anybody when it comes to beginning investing, set out an amount and basically assume that it's gone. Whether it's $100 or $500, especially if you're starting out, assume that it's gone. It's just play money. Do not play with your bread money. So number one, value-based investing. Number two, do not play with your bread money. And number three, big fan of DCA or dollar cost averaging. Even in the traditional stock world, dollar cost averaging is one of the safest and programmatic and disciplined ways of investing over time. I know many of my colleagues and friends who invest simply $50 a week. That's where it goes, $50 into multiple coins or multiple investments or multiple stocks, what have you. And so it's a great way to pull out from your income. Let's say if it's $50 a week, you're talking about $200 a month, 200 USD a month that you're going to pull out from your income or pull out from whatever you earn and say, hey, this is going to be going to my portfolio. What I really like about dollar cost averaging, especially for beginners, is it removes the emotionality of the swings of the market, right? And it's easy, especially with FOMO and FUD, fear of missing out, or fear, uncertainty, and doubt, to easily have a mainstream media personality or something that you saw on Telegram or LinkedIn or Facebook, and they said, man, it went up 1,200%. I'm making so much money. It's easy to get into that game, but we want to remove emotions as much as we can from the stock or the investing game.
Thank you. I think many of the principles also apply for any kind of investment. Maybe
absolutely.
Next one, I'll pass on to Matthias. What would your investment strategy be?
Okay, I think Peter already mentioned the dollar cost averaging. I figured it out when I was like 18, 19 years old with a fund saving account. I started to contribute every month like $300, and I kept going for 5-6 years. And eventually I had a tremendous amount of money a few years later, which was good, right? And the other thing is, once you have more, and like Peter mentioned, the bread money thing, I think of it like a core satellite kind of setup. Mm-hmm. The core should be something that you don't touch no matter what. And the satellite thing around it, that's something more tactical. You can refer to it as play money, or something like, I like to look at it also as the upside money, where you can actually risk it sometimes to try to get into a higher sphere of returns. But of course, whether you can beat the core portfolio per se, that is another question. So there, you also have to put these two into some kind of relation. And then, of course, what I like to do is when the things pay off dividends and additional money comes in, I will increase the core first, and the satellite will grow like alongside with it. But I usually don't put new money in the satellite, and hopefully the satellite is managed well enough that it grows even faster than the core, so that I have to kind of chop off the returns there and put it back into the core. And therefore, one thing of the concepts I like to think of it is, since I have been advising a lot of wealthy people, it was interesting. You have people from all kind of walks of life, and everyone has their own story, how they became wealthy. I became a millionaire because I started a company. I did this, I did that. I invested in real estate. I built up an empire for that, right? There's so many stories. But the interesting thing is, a lot of people, they focus so much on how to get to that level, but then later, it's even more interesting to figure out how do these people manage to stay wealthy. It's like the thing at the end is then eventually how to get out of that, what helped you to get there. Because once you have won the game, that's something everyone has to decide for themselves. How much does it mean for you? When do you have won the game? You got to start playing with some part, right? Because if you keep playing, of course, it's something if you can control it, then better, right? Then this is your thing that you can keep rolling. But once you have reached a certain level, how much do you put aside and keep that, for a rainy day eventually, or you put it into something more diversified? So that's the core satellite strategy. And dollar cost averaging for me is built in, also with rebalancing over time between the two parts.
And you mentioned the core satellite strategy that when you have extra money to be put into the investment, you don't touch the satellite. You are like planting individual seeds as your satellite investment, and the core, you always do dollar cost averaging.
Correct. Yeah. The core, I still do dollar cost averaging. Exactly. And like this year, I do it not every month. I do it occasionally. I buy more income, simply like that. And for the satellite this year, my most exciting purchase was the ARKX, the space fund. I just think it's a beautiful idea. I'm a dreamer. I believe in the future will be better than the past. So as an Imagineer, I want to be part of that if that things materializes, right? So therefore, that's the satellite part. But the core can be more boring. Yes, Peter.
And you would say that that's probably what I would call value-based investing, right? You value the future. You value investing in that future, even though there's risks and unknowns. That's part of who you are and what you care about. And so would it be a fair statement for me to say that you are a value-based investor?
I think from that definition on, I think we have a match here. Yes.
And dollar cost averaging.
Yes.
And not your bread money.
Not bread money. No.
No bread money. No. I will see like all the core principles are pretty similar in terms of investment, regardless of cryptocurrency or traditional stocks and assets. And I guess I have all the questions. I don't have other questions. So do you guys have other questions for each other?
Well, I have an immediate question based off of what I've heard so far from Matt. Is being in the traditional world, I would like to know, because I mean, I've been in there before as well, but think my mental models have shifted and I'm highly biased towards cryptocurrency today. So I might have lost a little bit of my edge when it comes to the traditional financial world. And so I wonder, how do you help your clients and your customers make value-based decisions on their investments in the traditional world? I'm curious.
Okay, I think number one is every client is different. There's no one size fits it all. Number two, spend time with the client. So I talk with the people. I try to understand them as well as possible, as deep as possible. And I try to understand also, one thing is what they say. The other thing is what they feel. The third thing is what they have in their mind. And I think the emotional part, like you mentioned, is sometimes super important to try to manage that as well, because some people may not understand themselves good enough to kind of make decisions about that. And I hope my kind of value here is I help people to find their best fitting portfolio. So my services are tailor-made, and then matching the goals eventually, right? Help them reach their goals. And that can be in all kind of things, right? I have clients that are more aggressive. I have clients that are fully invested at the moment into like the reopening trade. I have also people that are worried about inflation. I have people that are worried about the future of their kids. People who are retired and need some steady income, right? And then, so each and every one of them needs a different solution, and that also fits them personally. I think that's where I make that kind of edge to help them accordingly. And maybe I have a question for Peter. Yes,
I had a follow-up question. So for everyone out there and everyone listening, right? So I bought my first Bitcoin in 2011, and I was talking about that on Yassi's other podcast. So I've been in this world for over a decade now. So again, very, very biased. However, at the same time, I think there's well, let's just put it this way. I began in around 2015 to about 2017, began to hear of traditional financial managers, traditional financial investors begin to talk about balancing a portfolio and ensuring that maybe, just maybe, that it might be important to have some type of percentage of cryptocurrency in your total portfolio. And now from 2017 to 2021, I mean, it is pretty clear. I get feedback and I hear all the time of traditional account managers, financial investors that are also basically saying the same thing. You should probably have a small percentage within your portfolio, whether it's about 5, I've also heard up to 12 to 15% of your portfolio should be in alternative assets, riskier assets like the cryptocurrency world. And so I'm curious, Matt, you lived through the 2016 till now period as well, and I'm sure you've heard that. And so why don't you advise your customers and your clients to have a small percentage of their traditional portfolio in the wonderful world of cryptocurrency?
Okay, beautiful question. Thank you. So yeah, I think the issue is there somehow that some people, they still have reservations about it. Number one is not understanding it enough. I'm now switching to the third person here, as you can feel.
Yeah.
And I think it's simply a matter of trust. I think the thing is, you have seen now what happened to Bitcoin when like some Fed officials kind of start talking about, oh, we should actually clamp it down, or, you know, it's very abstract. And of course, the whole concept of money is super abstract. Money is nothing else than crypto. Just maybe it's an evolution of money that we are seeing here. And whether or not, or at what point in time, the switch will be there. Money is something that you see probably, you see that people are they have more trust in the traditional kind of world. And the new world, there's so many solutions. So it's probably, if I go back to the 1990s, you have, I don't know, every company had a .com at the end. Like 3-4 years ago, everybody that wanted to make a quick buck made their own ICO, initial coin offering, right? Everyone did it. And then I have seen some of them that they disappeared very, very quickly, right? So it's very hard to say which one is the right one. And then, of course, you can go down and say, oh, yeah, you should have a portfolio of them. You should have a little bit of this, a little bit of that. You can have some Bitcoin, some Ethereum, some this, and some that. Diversify, right? And there, at the end, it could be interesting to be exposed to that. But the question is, do we need it? And if I look at what's going on in the world, if you hold like equities in companies, very boring, such companies like Nestle that produce food, or like in the US, you have some agriculture land companies that rent out their land to farmers. You have very basic values, and crypto, in a way, to just give the opposite. So I choose something super conservative, and on the other way, crypto is somehow up there in the cloud, and you don't know. It's not hanging on anything, and then some governments could shift it around back and forth. So yes, it's interesting. Like I say, with my space investment, it could lift off, it could fall down, it could crash into the Indian Ocean and without any control. We don't know, right? And that's probably one thing is, maybe my clients are usually the ones who've made it, and they don't have to take that risk. Of course, it could be interesting to have some exposure, but maybe I'm not at that level yet, even though it's already 2021. And I'm interested also to ask you. So I've been fascinated by cryptocurrencies, and yes, I also was in that world. In 2012, I had discussions with some of my colleagues who started to buy Bitcoin back then, and I did not listen, right? And I know some of them, they are sitting on huge positions at the moment, and it's good to know. And what actually gives you this certainty that, be it Bitcoin or something else, what makes you so sure that this is the right way, and not just that at one point you wake up in the morning, you read the newspaper headline, and they say, oh, you know, in the past they have banned gold in the US. They have done things that you could never imagine, right? In Germany, after the World War, you had forced mortgages on houses, real estate. You had a real estate, the war was over, they cannot tax you because there's no money in your hands. Well, they force a mortgage on your house. So there you go, 30-year, pay it off, please. So the government can do a lot. The last call is with the government. And I kind of hesitate there, because the government may not want to lose the control over money. So in China, we see Chinese e-coins coming up. Yes. I know the Bank of International Settlements, they have made studies about government digicoins, Fed coins, right? I think in the US, there's also some projects going on. So maybe the question, sorry, I keep talking, is like, what gives you certainty that you will be going out of that well if you have 100% in crypto?
It's a great question, and it's a valid question. I get that question a lot. Before I answer this question, Matt, I think it's important to highlight something that you said that I think is so important to the audience here. And what you said is that your clients might not need a crypto. And I find that to be really, really important, because you're a financial consultant, you're a financial advisor, and you want to advise your customers, your clients, on what they really need according to their own personal goals and aspirations. And if they don't need crypto, then they don't need it. And I think you're playing the right game, right? You don't want to force people into investments that they're uncomfortable with. So big kudos to you, big thumbs up to you, because I think it's really important to be contextual to individuals and their personal needs. I can think of many people in my life, probably mostly my family, who don't believe me, who don't need crypto. They will never need crypto, and I'll probably never convince them of crypto. It's okay. But I think it's really important and poignant that you said that. When it comes to the absolute, the confidence, right? Let's use that word. The confidence that I have in cryptocurrency, man, I'll tell you, it's really easy. I'm an engineer developer by trade. The first thing that I did when I learned about cryptocurrency in 2011 is I looked into the code. And so the code and the mathematics behind Bitcoin and cryptocurrency was what really convinced me, not the financial layer or the financial apparatus of it. For me, it was more of the immutability of the code. So let me unpack that just a little bit. In 1992, 1993, Tim Berners-Lee created the internet. And no one could have ever expected in 1992, 93 that the internet would become what we essentially have today, which is the core rails for communication, commerce, connection, business. We could go on and on and on. What Tim Berners-Lee created in 92 and 93 is essentially the rails of human evolution and moving forward. I think we can somewhat relatively agree on that, maybe some semantics aside. But what's great about the internet is a protocol. And a protocol is not, you cannot uninvent that protocol. I think we can all agree here that the internet is expanding to new markets, new demographics, new locations every single day. There are countries that are getting online, populations that are getting online in numbers never seen in history before. So let's take that model. A never-ending, completely expanding protocol that's eventually going to touch every human in the world. Well, Bitcoin is a protocol just like the internet. You cannot uninvent it. You cannot get rid of it. It is immutable. It is decentralized, which means no government can truly control it. Yes, there are people who look at the doomsday scenarios of what if the government shuts off the internet? What if the government shuts off? Well, trust me, if the government shuts off the internet, you're not going to really care about your Bitcoin. You're probably going to care about two things: food and ammunition. So let's be honest. I mean, if the government shuts stuff down, I want to make sure that I have lots of food and ammunition, right? Mm-hmm. And so Bitcoin will continue to expand ad infinitum until every individual in the world is touched. And so the question I always have for people at this particular juncture point in time is, why don't you have just a little bit, just in case? And so that's always my argument when it comes to my confidence in Bitcoin. It is simply the mathematics, and it's simply that we already have a precedent, a model of a protocol that is immutable and will never go away in the internet. Bitcoin is just like that.
Do you have follow-up questions, Matt?
Yeah, I think maybe what Peter just said, I read somewhere that if every millionaire on this world just want to buy one Bitcoin, there wouldn't be enough of them around.
It's true. And it's a great thing that the Bitcoin can be cut up into 9 different decimal places, if I remember correctly. And so there's an opportunity for you to own just a fraction of a Bitcoin and get in the game and learn just a little bit about it. But yeah, it's cryptocurrency is going. Can I give you another reason? Is it fair? Is it fair for me to give you another reason?
The more the merrier.
I will tell you, in 2018, I had a moment. I had a moment that convinced me beyond almost anything else, and it was a pragmatic, a pragmatic experience that I had. You see, I have a little niece, and she was turning 11 years old at the time. And, for Christmas, they usually want presents and these types of things. And so, we parents talk to each other. Hey, what should we get our niece? What should we get our cousin? These types of things. And my niece reached out to me in the winter season of 2018. And she said, Uncle Peter, can you please send me $100 of V-Bucks? Now, I didn't know what V-Bucks was, so I actually had to Google this thing. So I Googled V-Bucks, and I found out that it is the digital currency for the popular worldwide game called Fortnite. And so this was a moment where I literally sat at my computer, Matt and Yassi. I literally sat at my computer. I was like, what? She's asking me for $100 of digital currency that's not cryptocurrency, it's in-game currency, so that she can purchase skins, new mods, new weapons, and all sorts of new gear that she can have in her digital library in this game. At that moment, I knew for a fact that this world is going to be moving to cryptocurrency, because my niece showed me a vision of the future. And what I found out later is that with the in-game currency of V-Bucks within Fortnite is already a billion dollar plus digital economy. And so the youth of the future, right? Our millennials, our Generation Zs, those individuals are already interacting with digital currency. In the future, I see a future where all of them will expect some semblance of digital currency that is not going to be the USD or the yen or the pound or the what have you. It's going to be different types of currencies that they can apply to different particular applications that they're using, games, utilities, work, etc. And so the real question is how can we amalgamate and how can we create systems so that all these disparate tokens, these disparate coins, these disparate applications can work together, so that way I don't have to have a portfolio of 10,000 different coins, and this one works at Starbucks, and this one works at Walmart, this one works at Fortnite, this is the one that I use for. There has to be a way to be able to create some sort of, dare I say it, standardization or interconnectivity between these disparate chains, so that the younger generation can create commerce and can exchange without all the complications that we have now. And so there's a long way for us to go in terms of making cryptocurrency and digital currency easy to access, and the liquidity options. We could go on that forever. There's not a lot of liquidity options right now for a lot of those as well. So there's a lot of growth in the market. There's a lot of maturity that needs to happen. But I'll tell you, in my eyes, that's where we're headed for sure.
Thank you. Comprehensive. I've seen you had a question here in the audience, if I may. So Fritz, he has asked about, he said, I don't have any money, and if you want to become a millionaire, how would you start?
Yeah, it's a question to both of you. So if someone does not have,
I'll let you start, Matt.
Okay. Yeah. If you don't have any money, I would start building a skill set, right? Find something that is valuable, try to market it, up your income, earn more money, and then try to increase the gap between what you spend and what you earn, and invest the rest.
Yeah, the steady way.
Yeah.
I can concur 100%. The best way to earn more money is improve your competency. You see, and I'm sure Matt and Yassi can agree with me here, is that there is a direct function between your competency and your income. The more competent and skilled you become, your income generally follows as a direct result of that. Mm-hmm. And so investing your time into becoming competent at a skill or a trade or a particular job function is the best way to increase your income. And just like Matt said, siphon off a little bit for investment, siphon off a little bit for other things as well. But competency in a skill is the primary way to increase income directly.
I think we also mentioned that in the money course is level up your professional skills. And same concept here is, like you said, when you level up your professional skills, your value in the market increases. Once your value in the market increases, you earn more, but then do not inflate your lifestyle. Still keep it below your means, and then increase the gap between your earning and your expenses, and put the extra money in savings and let it work, in investment, and let it work for you. And then the question next is, what type of investment? So for someone who has never ever invested any dollar, how would you advise them to start?
How would I? Well, there are many. I'll go first here. There are many great applications out there that can teach you investing for free. They give you play money. If you're based in the US, for example, a popular one is Robinhood. You can check out Robinhood. They'll give you a free trading account. There's also eToro. So you might have heard of eToro before. They can give you a free trading account where you can learn how to trade with play money. And it's a great way to get nuanced into what investing looks like. Now, what's great about eToro, for example, is they do crypto and traditional investments. And so you can start, I forget what the portfolio balance starts with, maybe it's $10,000, but they give you let's just say $10,000 of play money, and it allows you to really act like an investor. Yes, you're going to make mistakes. I'm sure Matt has probably hundreds of stories of mistakes he's made, just like I have over time. And one of the things, and actually I want to get your opinion on this, Matt, is one of the things that I have found that as much experience as I have in the investing world, it's really hard to communicate those lessons to investors. And I often say, as a caveat to whoever I'm working with, I'll say, you know what, this has been my experience. And at the end of the day, you have to put time in the seat. Just like competency, investing requires higher levels of competency, is that you have to spend time in the seat to learn the game, and you have to make mistakes. I know no one likes hearing that. And so my question to you, Matt, is I'm certain you probably talk similarly like this to your customers and to your clients. How do you advise new investors and new clients that are just starting out, and what are your biggest tips for them?
I mean, like what you said, just I have one sentence in my mind. Is like, sometimes you win, sometimes you learn, right?
Ooh, I like that.
You never lose or whatever. It's bad, right? You learn. And I think where that applies the most is, I'm a father. I have 2 little kids, and I want them to learn early because that's valuable. So you have to, same as if you have employees, if you're a manager or something, the same thing. You have to put them in charge. You cannot always protect them or be there for them. That's actually the same thing. Like you teach a person how to fish the fish, him or herself, or you keep giving fish. That's the same difference there. Nothing else, right? And therefore, I think the younger you are, the more mistakes you make, the faster and better you will be set up for success later on. And for just a simple thing, like I with my son, we do something called Baba Bank. So he gives me his savings, and I give him interest every week. And if he wants, he can actually take money out of that. So when we are in a shop and he want to buy something, I have no right to say no. I can advise him and say, I don't think it's a smart idea, but if he wants it, I promised him that's his money. And once he saw something that cost slightly more than he had, and then I gave him an offer. I made him an offer and say, why? I give it to you right now, but your balance will go below zero, sub-zero, right? And later on, instead of I give you interest, you have to pay me. And his sister did not buy anything. So the sister next week, she got interest and he had to pay. So the gap was increasing, right? And that was, I think, a super important lesson, because he will never forget that, because it felt differently, right? And what you said just, Peter, if you hear somebody talking about stories, it's, oh yeah, nice, I heard about that before. Yeah, sure. It's like wisdom that is floating around, but you don't know how to apply it. But if you get hurt yourself and you feel it, this is something our system doesn't forget. It's like if you touch the hot stove or something, you will never touch it a second time. And that's why it's a little bit off the investment topic. But I think if you are young and you get started, be sure you put your larger part to certain things that are more tested for you. And if you go into new things, that's probably why I'm not in crypto yet. Try to take baby steps, right? If you want to explore, if you say this is something I want to do, you have to make a step. And then when things happen, it happens in a more controlled environment. And if you are the parent or the teacher or the manager, you are there to supervise, and you have to slowly erase these boundaries and allow for mistakes to happen, because this is how people grow.
I love that answer. It reminds me a lot of a suggestion that I gave to an individual just last year, which was, so I'll give you some context. I'm a developer engineer, so we love this idea of paired programming, making sure that two engineers can look at the same code and ensure that there's high quality, good code commentary, making sure the code works, et cetera, et cetera, et cetera. And the thing that I suggested to him, as I said, you should do pair investing. Find a friend who will keep you accountable. Start learning together. And just like kind of the dynamic with your kids is, if one of those pair investors makes a good call and the other doesn't, that kind of hurts, right? And you won't forget that. So there's an aspect of friendly competition there. And I will always promote this idea of learning and growing together. And so I'm a big fan of that. So for anyone out there listening, man, find a friend, find someone that you can pair with and say, you know what, I've never been into this traditional world of crypto or traditional world of, of investing or crypto, but we both can open up an eToro account, or we can both open up a fake account, and we can learn together. And so it's a great way to learn, I think, accelerate your learning, as well as a little bit of healthy competition goes a long way.
Right. And one thing I also want to mention that I interview a few people that get started with investing, myself as well. It's also very helpful if you start learning the principles and gain some knowledge before jump into the swimming pool, jump off the cliff and test it. So educate yourself, learn it from consuming content, reading books, and then test water a little bit by yourself. And then, okay, I have one question from the audience. It's very technical. I will summarize it as it's maybe to Peter. What would you think about the high transaction fees of Ether? And if people do transactions, what do you think of the behavior? How should they deal with it?
Oof, I'll try to make this as short as possible, because I can go deep into the technicals of Ether and the transaction fees. Long story short, Ethereum was supposed to be, the original intent was supposed to be essentially a utility token that could be leveraged for running applications on the protocol. The problem is that Ethereum, in terms of the pragmatic use of Ethereum, has turned into more of a store of value. And so because the tokenomics, or the economics of Ethereum, have fundamentally changed, because market demand as well as market need for some sort of investment that is a store of value, Ethereum will continue to have congestion, and Ethereum will continue to have high transaction fees, because the original intent of Ethereum is no longer being pragmatically used by the market. So what do I think about it? Well, use Ethereum as a store of value, and rather than a work token or utility token would be my answer.
And then one of our audience has asked about cryptocurrency investment portfolio. Do you want to share yours?
No, actually, I tweeted about it. So go to my Twitter, type in @AgilePeters, scroll down. I think a week ago I tweeted. I can't tell you it's my portfolio, not financial advice. I can tell. What I tweeted was, these are the tokens I'm looking into. So check out my Twitter, and you can scroll down and you can see the tokens that I'm interested in right now. We'll put it that way.
Okay. So do you guys still have any questions to each other?
I think I'm good. I think this is a great conversation. I guess my only final question here, Yassi and Matt, is, did I give you, Matt, a little bit of things to think about when it comes to cryptocurrency? Because I certainly don't want your clients to miss out on the future of money.
Well put, well put. Yes, nobody wants to be put in a situation of missing out, right? And yeah, definitely, I'll be trying to educate myself more on this. Maybe on your side, I'd like to ask, so what would be for you, if you wouldn't be in crypto, what would be your second favorite investment? Or do you have any plan to like get out of crypto at one point, or?
No, man, crypto is life. But that's a very kind of a meme thing to say. Real estate. real estate, man. Like, I am not an expert in real estate investing. I only began dabbling in that in about the 2015-16 time period, but I didn't spend a lot of time there. I have a couple of real estate investments, but let me put it this way. And maybe this is just my naivete and my ignorance because I'm not a deep real estate investor, but all of my very wealthy friends all have pretty significant chunks of their portfolio in real estate. And I just haven't had enough time to really dig into it. But I know, based on my trust that I have in my friends and their ability to make massive amounts of wealth in that world, real estate is one of those areas, man. I mean, you can leverage debt to make money. It's amazing, right? And it's something that, again, I haven't had time to spend on. But man, if you dig into real estate, there really are great opportunities to make significant income through it. And you're constantly leveraging debt, so you're actually never really using your own money, which is always a powerful idea.
And it's tax optimized as well.
Yes, that's right. It's tax optimized as well. So absolutely. Actually, maybe Matt, you could probably teach me about how to do real estate investing better, probably.
Yeah, we actually have one live session talking about real estate, and then Matt has real estate in different countries.
Ooh, for sure. We could set that up. Teach me. I want to learn, Matt. I want to learn.
Here, you're a client on this side. Oops. Okay. If there's no other questions from both of you, let me see if any of our audience has any questions. So Anthony mentioned that Simple Path to Wealth by J.L. Collins is a great place to start for those who want to understand money and investment.
Yeah, and great book, wonderful book.
And then Im Rose said, I only started focusing on improving my investing process after starting to lose principal.
Yeah, that's probably the point where it starts to hurt, right? Once you start to do mistakes, you gotta learn, you gotta adjust, right? And I think that's something at the moment. We're in 2021. Of course, besides March last year, we've been in uptrend markets since the great financial crisis, more or less, right? And yeah, it will be interesting to see if that turns eventually one day. Of course, markets, if you believe humanity keeps improving, things will move onwards. I'm an optimist on that. So long term, it should be okay to stay invested, right? But in the meantime, who will stay the course? That will be the thing to, if you shake the tree, who can still hold on to the branches? That will be interesting.
Yeah, stay the course.
Yeah.
All right, if there's no other questions from audience or from you too, thank you so much for being here, Peter, as our guest. And thank you so much, Matt, for playing the guest role and having this Q&A session with Peter. I hope the audience enjoyed the session. I do very much. If some of the audience are interested in following us, so you can follow all of us on Twitter, and Peter's Twitter account is @AgilePeter. And then for Matt and myself, and you can find FI_Imagineer or Fast Track Life. And if you have any further questions, leave it in the live chat below. I think both on YouTube as well as on Facebook, you will see the comment section. And you can follow us on Twitter, have a conversation with us, and see you in the next episode. Bye-bye.
Thank you so much.
Thank you.
Bye, guys. Bye-bye.